Welcome back and congratulations. You reached the final video in our Article 6 educational video series. This is Module 3, Part 2, and the final step in understanding how countries operationalize international cooperation under Article 6 of the Paris Agreement. In the previous video, we explored what the governments need to have in place to authorize Article 6 activities. Now, we will close the loop by examining how authorized mitigation outcomes, or ITMOs, are tracked, reported, and used. By the end of this video, you will be able to understand what triggers the need to track and report ITMOs, describe how registry systems work, identify how countries report ITMOs use and avoid double counting, and connect ITMOs tracking to broader transparency and NDC accounting frameworks. Understanding ITMOs for tracking purposes. Let's start with the basics. ITMOs are internationally transferred mitigation outcomes that have been both authorized and fast transferred. These two actions, authorization and fast transfer, define when an emission reduction officially becomes an ITMOs, triggering tracking and reporting obligations. Authorization is a government's formal approval for an outcome to be used towards specific purpose, like another country's national determined contribution, or the carbon offsetting and reduction scheme for international aviation, commonly known as CORSIA. Fast transfer is the action that makes the ITMO internationally recognized and triggers the requirement for corresponding adjustment. What qualifies as a fast transfer depends on the intended use. For NDC use, it could occur, for instance, when the ITMOs is moved from the host country's registry to the acquiring party's registry. For other use, such as CORSIA or voluntary purposes, the host party must define what constitutes the fast transfer, based on the options allowed under the Article 6.2 guidance. For example, in the case of CORSIA, fast transfer could be defined as a point when the credit is authorized, issued, used, or cancelled by an airline operator, depending on the approach chosen by the host party. The host party must also ensure that it follows the Article 6 rules applicable to the chosen option. To summarize, once an ITMOs is authorized and fast transferred, it enters a formal life cycle of tracking, reporting, and accounting. Tracking ITMOs with registry systems. To track ITMOs, each country must have or have access to a registry. This registry can be a national registry, the International Article 6.2 registry provided by the UNSC Secretariat, or another recognized registry platform that meets Article 6.2 guidance. Registries must meet several functional requirements, including assigning unique identifiers, including the serial numbers, to ITMOs, recording all relevant transactions and transfers, identifying the purpose of use, such as NDC, CORSIA, or voluntary use, and enable reporting to the UNFCCC. Let's look at a real-world example. Switzerland and Thailand cooperation on ITMOs tracking. In 2023, Switzerland and Thailand became the first country to complete a full Article 6.2 ITMOs transaction using national registry systems. The mitigation outcomes generated from the Bangkok EBUS program, the first Article 6.2 project between Switzerland and Thailand, are first recorded in the Thailand Carbon Credit Registry operated by the Thailand Greenhouse Gas Management Organization. This registry handles the host country's side by documenting the authorization, issuance, and fast transfer of the mitigation outcomes. The mitigation outcomes are transferred to Switzerland by applying the cancellation to recreation method, which started from the Thai side by canceling the mitigation outcomes from its registry and communicated with Switzerland, from which the Federal Office for the Environment tracks its ITMOs acquisitions through the Swiss Emission Trading Registry, which records ITMOs information. Both sides established an official communication channel and cross-coordination process to ensure accuracy and consistency of data exchanged between them. Record of the ITMOs transaction is also publicly disclosed on both sides' registries for transparency. This collaboration demonstrates how two countries can use separate but harmonized registries to securely track ITMOs, define purposes of use, such as Switzerland's NDC, and ensure data integrity across borders, setting a precedent for future Article 6.2 cooperation. This example highlights how national registries serve as the digital backbone of trust and accountability, ensuring traceability and environmental integrity in international transfers. Reporting annual information on ITMOs. Once a country authorizes, transfers, or uses internationally transferred mitigation outcomes, ITMOs, it must report this information annually to the UNFCCC. This is done through the Article 6.2 Agreed Electronic Format, or AEF, a standardized reporting template that ensures consistent, transparent information across countries. Each year, countries must submit key data, including information on ITMOs authorized, transferred, acquired, and used. The purposes for which ITMOs are used, for example, for an NDC, COSIA, or voluntary purposes. Information relating to the authorization and underlying mitigation activities. This information is submitted to the UNFCCC and made publicly available through the centralized accounting and reporting platform, commonly known as CARP, helping ensure trust, transparency, and oversight in carbon market activities. Importantly, the annual AEF submissions provide the detailed transaction-level data that feed into a country's biennial transparency reports, or BTRs, under the Paris Agreement's Enhanced Transparency Framework. While the AEF focuses on year-by-year tracking of ITMOs flows, the BTR provides a broader overview demonstrating how these ITMOs align with national progress towards NDCs and demonstrate adjustments to verify that no double counting has occurred. Together, the EF and the BTR form the foundation of accountability for Article 6.2, allowing the international community to monitor cooperation efforts while upholding environmental integrity. Avoiding double counting. A core principle of Article 6.2 is the need to avoid double counting. The risk that a single emission reduction is claimed by both the country where it occurs and the country that acquires it. To prevent this, countries must apply corresponding adjustments. When the host country transfers a mitigation outcome, it must add the amount into their emission profile, used in tracking progress and achievement of its own nationally determined contributions. The acquiring country, in turn, uses the ITMOs to deduct their emissions profile in its own NDC account. This ensures that only one country claims the benefit of the emission reductions, upholding the environmental integrity of the Paris Agreement. These adjustments must be done using one of the methods outlined in the Article 6.2 guidance that is applicable to the country's NDC type. Countries with a single-year NDC can apply the average method, which adjusts emissions annually by using the average ITMOs amounts calculated by dividing the cumulative ITMOs amounts with the number of NDC implementation years that has passed within the NDC period. Or the multi-year emissions trajectory or budget method, which requires countries to first formulate the emission trajectories or budget from their NDC and apply corresponding adjustments by adjusting emissions based on the total annual ITMOs amounts for each year. For countries with a multi-year NDC, they must apply the multi-year emissions trajectory or budget method, which is closely similar to the method for a single-year NDC. But the key difference from single-year target is that multi-year targets require both annual and cumulative calculations. Corresponding adjustments are reported in the country's biannual transparency report, or BTR, a mandatory submission under the enhanced transparency framework of the Paris Agreement. The BTR provides a comprehensive picture of the country's NDC implementation and how Article 6 mitigation outcomes are used, transferred, and accounted for. And it verifies that no double counting has occurred. Through this reporting and accounting cycle, corresponding adjustments serve as the technical backbone of trust in Article 6.2 cooperation, ensuring that mitigation outcomes traded internationally are real, measurable, and only counted once. The first ever officially recorded ITMOs transfer under Article 6.2 between Thailand and Switzerland marks a major milestone in operationalizing carbon markets under the Paris Agreement. To avoid double counting, the transfer is formally recorded in both countries' registries. Thailand applied corresponding adjustments to the transferred ITMOs and included this information in its first biennial transparency report, BTR1, when demonstrating progress towards its NDC, ensuring full compliance with the enhanced transparency framework. This pioneering cooperation set the benchmark for how accurate accounting and transparency uphold the environmental integrity of international carbon markets. So while the mechanics may seem technical, these steps are vital to uphold trust, accuracy, and environmental integrity in global climate cooperation. In this final video, we explore the crucial last step in the Article 6 journey: how countries track and report internationally transferred mitigation outcomes, ITMOs. We learned what qualifies as an ITMOs and when tracking begins in the cooperative process, how registry systems are used by countries to record and manage ITMOs data, what information must be reported each year using the AEF format, and how countries apply corresponding adjustments to ensure environmental integrity and prevent double counting. This stage brings everything together from project development to authorization and transfer, ensuring that every ton of mitigation is transparently tracked, accurately reported, and used with accountability towards climate goals. With this, we close the loop on the full Article 6 implementation process. As we conclude this educational series on Article 6 of the Paris Agreement, let's take a moment to reflect on the key lessons from each module. For Module 1, the big picture, we explore the purpose of carbon market, the role of Article 6 in driving international cooperation, and how it supports ambition, private sector engagement, and environmental integrity. We also cover the basics of bilateral cooperation under Article 6.2 and what countries need to participate. For Module 2, from idea to implementation, we looked at how countries can support Article 6 project development, including project types, investment mobilization, and full project cycle, from concept to authorization, MRV, and ITMOs transfer. We also clarify the roles of governments and private sector. For Module 3, making it work in practice, we focus on how governments authorize, track, and report ITMOs transactions. This included institutional setups, authorization procedures, registry systems, and compliance with enhanced transparency framework. all to ensure accurate accounting and avoid double counting. Through these three modules, we've built a full picture of Article 6, why it matters, how it works, and what governments and stakeholders must do to implement it with integrity and impact. Article 6 represents one of the most powerful tools for accelerating international climate cooperation. But it requires strong institutions, transparency, and robust processes to deliver real results. Thank you for joining us on this journey. We hope this series has helped you understand how countries can use Article 6 to achieve more ambitious climate goals together.